we'll have other ones.
Tell me what took place overnight between yesterday at the close of market and today at the beginning of market. What were the guys that you used to work with saying to each other at Fidelity, and what were the people you know saying? For example, IBM made a decision to buy back their stock, and that presented some kind of push on the market, and their stock went up 6 points.
Well, one thing you're trying to do is say, of all these public companies out there, here's the company I really like. The fundamentals are terrific. Their earnings are doing well. Their competitors are doing poorly. I think this company's doing terrific. And all of a sudden, the stock might have gone from 40 to 30 because of this decline. That would say, wow, here's a chance to buy it. So you're trying to say some companies might have been overpriced at 60, and all they did was go to 50 and say, big deal. So you're trying to find companies you liked anyway. Right now you liked them, and now they've had a haircut. That's what you would do. Not a stock that went from overpriced to fairly priced. Something that was fairly priced at the start of this exercise, and then had a very, a 5-for-4 sale.
If you had been managing the Magellan Fund this morning, you would have been buying like crazy?
I would have been researching like crazy. I would have been saying, which companies are the same story? Is there anything really happening? This is a non-event for them. They're still doing well. Even if we have a recession, there's nothing to do with them. And that's the kinds I would try to buy. But let's say if a company, just think of this as being, you say to yourself, I think this company's going to earn something in the future. If it's already discounting that, if it's selling at a huge multiple, you say, it has to work. And then it's only going to stay even. So you have to say to yourself, if I'm right, how much am I going to make? If I'm wrong, how much am I going to lose? That's the risk-reward ratio. In Stock Shop, we talk about, if I'm right, I hope I'm going to double, triple my money. If I'm wrong, maybe I'll lose 30, 40%. That's a favorable ratio. We say, if I'm right, the stock's not going to go up